On March 14th, AI Stocks Hub published both an article and a YouTube video explaining the Nebius opportunity. The stock's prior session close was $112.95. By August 13th, NBIS closed at $255.04, a gain of 125.8%. Now Q2 gives us the evidence to test what we got right, what changed, and what investors cannot ignore next. This is educational research, not financial advice. Please verify all data independently. Selected consensus expected $576.74 million of revenue and an adjusted loss of 82 cents per share. Investors also wanted proof that signed capacity could become recognized revenue. The biggest concern was funding rapid growth without weakening shareholder returns. Revenue reached $582.3 million, about 1% above the selected estimate, and 454% higher year over year. Adjusted EPS was negative 12 cents, or 70 cents better than expected. Nebius separately reported GAAP EPS of negative 68 cents. NBIS closed at $193.23 before earnings. One session later, it exploded 34.1% to $259.20, then held most of that move with a $255.04 close on August 13th. Positive adjusted EBITDA, better deal economics, and strong future capacity demand turned a good quarter into a dramatic repricing. Nebius AI generated $574.9 million of revenue, up 514%, and nearly all group sales. Annualized run rate revenue reached $3 billion. 4 landmark deals averaged more than $1 billion each, although most related capacity contributes mainly during 2027. Group adjusted EBITDA turned positive at $236.2 million, while operating cash flow reached $2.246 billion. But the growth engine consumed $5.657 billion of quarterly capital expenditures. Nebius ended June with about $8.04 billion of cash and $8.50 billion of non-current debt. The opportunity grew, and so did the financial weight behind it. Management reaffirmed $3 billion to $3.4 billion of full-year revenue, and a $7 billion to $9 billion year-end run rate. It also maintained an adjusted EBITDA margin near 40%. Meanwhile, contracted power guidance rose to 5 gigawatts. Here is the capital story investors noticed. Customers are helping fund the buildout. About 70% of Q2 deals included prepayments covering half to 60% of related capex. Nebius expects more than $9 billion of customer prepayments in 2026. That does not eliminate capital risk, but it changes the economics. AI cloud growth, margins, and deal payback all improved. On the negative side, GAAP results remained in the red. Capex exceeded $5.6 billion, and share issuance created dilution. Demand is strong, but shareholder economics still need proof. Our March 14th AI Stocks Hub article examined Nebius as an emerging AI cloud infrastructure platform. The accompanying YouTube video, titled NBIS Stock Explained, highlighted the NVIDIA investment, Microsoft agreement, and infrastructure boom. Since then, the stock gained 125.8%, while Q2 revenue grew 454%. The early thesis gained evidence, but today's valuation, financing, and delivery risks are far larger. Bulls can point to 514% AI cloud growth, customer prepayments, and 5 gigawatts of contracted power. Bears can point to massive capex, debt, dilution, and a share price near the selected average target. The business improved, but the stock became less forgiving. Watch second half revenue, the year-end annualized run rate, and customer prepayments relative to capex. Also track new debt, ATM share issuance, and delivery for Microsoft and Meta. These measures will reveal whether rapid growth creates durable shareholder value. Nebius earns 4 out of 5 for headline results, 5 for AI momentum, 4 for guidance, and 3 each for profitability and execution. The verdict is balanced. Our March thesis was validated, but future returns now depend on disciplined conversion and financing. Thanks for watching. Like, share, and subscribe. Then visit AIStocksHub.com.